Dory, great to see you. Do you see opportunity right now because we're seeing a bit of a sell-off here at the end of December?
I do. I think there's opportunity across the board. I'm a little disappointed that NVIDIA's not down more because I wanted to buy something.
Where do you see opportunity in what specific areas of tech?
Well, I think in all areas of tech. I mean, first of all, we got a market sell-off here towards year end for whatever reason. It could be profit taking, early rebalancing, end of the Trump bump, euphoria, fear of cutting rates, et cetera. But then I think you look at some of these sectors and try to see where they've been going up. You brought up insurance earlier. I think community banks still look really good. I know quite a few community banks still trading below 12 PE. And then a market where everyone's crying over valuation, that screams undervaluation, especially when you have banks that are growing, have stable deposits, and are looking for an easement of regulation so they can do more M&A going forward.
There is some concern watching the bond yields here and an indication that maybe the Fed is not going to keep continuing on its path of cutting. Maybe this is where we're going to stay for a bit. What's your view on whether that should affect the equities investment?
Well, absolutely here. And we're getting mixed messages from all the wirehouses. You know, Goldman comes out, still says we're going to get 3 rate cuts, and the Fed comes out and says, look, we changed our dot plot to 50 basis point cut next year. So I don't know if they're paying attention or not, or maybe they just don't believe the Fed knows what they're doing. But the Fed's got a track record over the last year or so of being right and the market wrong on what they're going to do. Having said that, the market's sending a little bit different message, because if you look at that 10-year, it's up 60 basis points since they've last cut 100 basis points. So the market's saying that the rates ought to be going up, not down.
So, Dory, is 2025 another year where the equal weight S&P 500 underperforms?
Yes, it is. If you look back, we've got the Mag 7 still dominating the market. And look at the year, right? We had an election year. We had a couple of assassination attempts. We've got all kinds of geopolitical scares going on out there, and we have 20% less volatility in the S&P than its long-run average. And I would contend, even with the increase of Mag 7 and that percentage weight, it's because of Mag 7. And why is that? Because Mag 7 makes a lot of money. It has heavy gross profit margin. It has heavy returns on equity. It's way different than the dot-com era. And it's actually providing stability, not instability. But people are afraid of it because it's just had such a big run up. But when you look at it, it's very, very real.